This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and what I'm going to do today is answer some questions I get. A lot of times I'm getting questions on which time frame should be trading, all right? And so I want to give an example today of, it's actually two different setups. It's the identical setup on two different time frames. And I want to make sure you understand which time frame you should be trading, how you can locate that, and how to go about trading it, and what the risk should be. So we'll go through that. First, let me just say that if you have an interest in learning more about some of these techniques, I would start with the book. I'm offering at a discount right now at rabilstockresearch.com/book. Also, if you do enjoy some of the content on this video, please hit that like button and also subscribe. Okay, so I've got the chart of Costco up, and I've actually got my grid. So just to make sure everyone's on the same page, let me just explain. This is the monthly. Okay, this is the weekly chart down in the bottom right. Got the daily chart in the upper right and an hourly in the upper left. All right, now I'm actually going to show trades on all four of these time frames just so you have an idea. I'm going to get to the two that look identical, but the first thing I want to do explain. So if we look at what happened on the monthly chart, we had this move to the upside in 2020 that ended in early 2022 and went through this consolidation phase and really formed a beautiful kind of contraction, almost like an ascending triangle pattern. As it started to emerge in the middle of 2023, we saw MACD forming a reverse divergence here, and we had a low ADX condition, but the buyers were still in command. They stayed in command because red never took over control, and so green stayed in command throughout this whole period. Once it started to emerge again, we definitely had an interest. All right, now when we trade off, or when we're looking at a signal on this time frame, we want to use the lower time frame as our trigger. All right, now if you notice what happened, we crossed above, which is this crossing above here. We actually pulled back and formed a reverse divergence. So let me just zero in on this very quickly. This made a higher low in price, and we made a lower low in MACD. Again, notice how green showed strength and took over control, but red never overtook that. And so green was still in command at this point. We got our trigger back to the upside. And so that would have been a monthly, weekly setup, all right, where we have a nice base formed with low ADX and a reverse divergence with a trigger, which is also a reverse divergence on the weekly chart, monthly, weekly. Okay, now, since that time, we have not had any setup on the monthly because we're too far away. You see how we're too far away? So you've got two choices. If you're going to get a setup in a specific time frame, it either has to be breaking out of a base, or in this case, kind of breaking out of a pattern, emerging out of a pattern, which it did. Okay, so that's kind of your one potential way. The other potential is pulling back to the 18, the area of the 18. Do you see all these pullbacks? These were all pullbacks on the monthly that could have been played and triggered by the weekly. So if I don't have one of those two things on a specific time frame, I don't have a trade. I can't trade off of it. So all through this period, there are no trades on the monthly. Now that doesn't mean that we can't trade the stock. It just means we have to alter our plan and understand how to trade in multiple time frames. So if we have this much strength, and I know this is strong because look at what MACD is doing. Look at what the ADX is doing. This is in a powerful, powerful trend. I can go down to this time frame and say, look, let's look for a setup. So we had the original setup out of the base, right? This was the base breakout. Then we get a move to the upside, and look at what happens. We get a perfect little pullback to a rising 18 above a rising 40, and they're moving up at about the same rate. They almost look parallel. Key thing to watch is notice how strong the ADX condition is. All right, now when we get, let's just zero in on this because I talk about this, especially in the course, I talk about this a lot. If we get a crossover to the downside, and this is really strong, it doesn't mean we disregard the trade. All right, It's still on. We still have a potential trade in place, but what I don't like to do is take the first move to the upside. I want this to come up and come back down and test again. You see how this had the red bar and then it had a green bar to the upside, kind of went up and sort of tested probably about a third, maybe a half retracement, and then came back down. Once that happens, it's kind of game on. If we get a trigger back to the upside, then I can consider playing it. All right, so we have that taking place. Now, if this is taking place on this time frame, our trigger is going to happen on this time frame. All right, so we want to look at the trend time frame, the setup time frame, and the setup has to be either a base breakout, right? And you can play a base breakout in a single time frame. You don't need to go to a lower time frame. But in the way this played out, I don't trade off the monthly. I will never trade off the monthly by itself. I'll always go down to the weekly. The monthly is just a little too slower moving. Unless I want to play a mega trend, then I'll use the quarterly trend and use this as a trigger for the quarterly. All right, and that can be done. There's no problem doing that. I like to do that in 401ks, more IRAs, that kind of thing, where I know I kind of want to put the money and see how long I can let it go. But in this case, you have a setup monthly, weekly, but now we're talking weekly and daily. All right, so just know what your time frames are. We have to know what the setup time frame is, and then we have to know what the trigger time frame is. Those are the two keys to understanding how to trade in multiple time frames. And there are a lot of times you get a setup in a higher time frame, but you never get a trigger on the lower time frame, and it'll save you a lot. My subscribers know this. I have lists that I put out, and we're watching pretty closely for the triggers. And if the triggers materialize, we can take advantage. If they don't, we end up probably eventually just eliminating the stock off the list. All right, now we get the pullback. The interesting thing is that if you notice the way this played out, it went in the zone and then came out. Well, that was this rally that I was talking about and then coming back down. So if you understand the criteria that I give in the courses of the 4 different entry patterns and everything, I think it'll save you and you'll understand how it plays out in conjunction with this overrun. Because in most cases, we're going to need to see a move into the zone and then we come out. And as we come out the other side, we've got an entry or a trigger on the smaller time frame. Now, keep in mind, during this corrective pattern, the ADX was low. That means that the red made a little pop here, but it never got the ADX going. So we know when that's the case, we still want to be watching this. Strong ADX on the buy side, no ADX on the sell side. We want to keep the bias is to the upside. We want to be looking for an entry. So we get our entry as we come back up. All right, now at this point, we make a pretty substantial move to the upside, okay? Similar to what happened here, okay? Notice how it's a similar pattern. And then we have confirmation. We got strength with ADX and MACD, and then we get our pullback to the 18, and look at what happens. We get overrun in MACD, all right? Now, when we get that, what do I say we do? Same thing on the weekly. We have to get a move up and then a move back down, and then it's game on as we come back up. All right. Now, in this case, this is interesting because this one is not only a move to the upside, testing that here and coming back down. During that period, we actually formed a reverse divergence. You can see how this made new lows, and it continued to make new lows. Even though this was basically making a double bottom. So we knew we have the potential for some kind of a slingshot to the upside. Now, while that's taking place, look at what happened on the hourly. So again, when we get a pullback, we have rising moving averages with really good momentum. We're going to the hourly chart now. All right, and hourly is really our entry. And if you notice, we got the move up, and then we came back down, and then we got the green bar showing up after MACD had sort of tested the zero line and come back to the upside. Now, again, if we start to zero in on this, you can see the exact same pattern essentially developed where we had strength here. Now, on the way down, you notice how we had some strength. So we know we don't want to play the first move to the upside. You see how these indicators are helping us make this decision? Where we know we don't really want to see this yet. We're actually waiting for, when we get red, to cause the ADX to climb like this, we are waiting for green to take over again. Notice where that took place was right here, and that would have been a very good entry for this setup. As this started to emerge again, we got the new setup on this time frame, all right, or the new trigger on this time frame. So we had the setup here and the trigger here. All right, now when we take a trade, and this goes for all of these. So if I take a trade that's based on the daily and I trigger off the hourly, I'm using hourly risk for that. All right, I'm looking at this time frame for the risk parameters. If I do a trade off the weekly, off the daily into the weekly, meaning I'm using a weekly trend and a daily trigger, then I'm going to use risk off the daily time frame. And finally, if I do a trade off the monthly and the weekly, I want to use weekly risk. All right, so whatever my trigger time frame is, I want to use that time frame to determine what my risk parameters are, what my targets are going to be, how quickly I'm going to get out, how I'm going to manage the trend. That's how, in almost every case when I'm talking multiple time frames, that's basically how I want to do it when I'm using just two time frames together. All right, it can get a little bit more complicated as we add in a third time frame, but I think if you just understand these basic concepts, right, this is monthly, weekly, weekly, daily, daily, hourly. If you learn these three different approaches, I mean, they're really three different approaches, even though they're the exact same patterns in some cases. This was the same pattern as this was, but we used it on different time frames. We're using different entry strategy because we're using a different time frame, and each time you enter, it's going to be a little bit different. You notice how this went in the zone and came out, and this one actually tried to go up and then came back down, but it had a different ADX, a more complex ADX situation, so we had to wait for more confirmation as we got back in. I mean, these are all the different details. That's why trading gets a little bit more complicated, because if it looked the same every single time, then trading would be pretty easy, but it doesn't. And that's why through the course, I go through all the different nuances that can take place. All right, hope this helps. Let me know if you have any questions. Thanks.